So hey guys, back again for another episode of Stock Watch List. And yeah, in today's episode we'll be looking at Palantir Technologies, ticket symbol PLTR, and we'll be having a look, engaging whether this stock is a buy right now, how is it performing, and what people or potential investors are saying about this stock. So let's get right into it. So Palantir Technologies Inc. builds and deploys software platforms for the intelligence community in the US to assist in counterterrorism investigations and operations. So this is justly telling you roughly what this company is all about. And yeah, the company provides Palantir Gotham a software platform for government operatives in the defense and intelligence sectors, which enables users to identify patterns hidden deep within data sets. So it's more of a technological based company that helps in what do you call that, AI, intelligence for deep to intelligence in terms of getting data that can help the government and defense sectors. So yeah, the company was founded in 2003 and is now headquartered in Denver, Colorado. So as always, we'll be looking at the financials for this company so far, and we'll be looking at the year 2018, 2019, and 2020. So in terms of the past 3 years, revenue has been on the rise since 2018 from about zero point 0.60 billion to right now currently at $1.1 billion. So that's nearly double, in an increment of nearly double in terms of revenue. Meanwhile, earnings went down. Just as much revenue went up, earnings went down as well. So what is the difference between revenue and earnings? So like the previous stock watch list, I'll be repeating again that revenue is the income a company generates before deducting expenses. Earnings, on the other hand, represents the profit a company has earned, and it is calculated by subtracting expenses, interest, and taxes from the revenue. So these are totally two different things, and it's not even distinctly related. So moving on, we'll be looking at the recommendation trends, starting off with recommendation trends. So for the month of June, July, August, and September, it has an average of about a good hold position in terms of the stock. So they are basically recommending us to maintain. If you have already invested in the stock, if you already purchased the stock, maintain, hold it there and not sell it, because there is potential in this stock. They believe that there is potential in this stock, and it's better to hold rather than sell at a loss. So yeah, recommendation rating right now currently it is in between that hold and underperform. So it's not doing well right now, and that's why they are more leaning towards their hold, because right now it is pointless in terms of selling the stock because you're not going to get any profits and it's just going to be a loss. So without knowing what the potential, what the future holds, it's wiser to just hold on to the stock than sell it if you have already purchased the stock. So analyst price target currently it is now at the $27 mark. Its average is the 24, $25 mark. Its low point is 18 and its high point and it's 31. So we are closer to its high point, and maybe that's why investors aren't hugely optimistic in terms of the profits you can get from this stock. So moving on. So as always, we're looking at the 1 year chart of this stock. And yeah, so the past 1 year, it is honestly quite, quite, I would, how do you say this? It's not stable, but you can see an average of around that $27 mark. So it has its up and its downs, but on the average, it has always been, near that $27 mark. It went up to 33 at one point, a bit higher than 33, and lower than 25, 24. But roughly it's at the $27 mark for the past year, after it took this uphill motion. So for the 52-week range, its lowest had been $8.9 and its highest has been $45. So currently sitting, we are near its average, I mean slightly above average. And yeah, let's move on to its 6 month stock profile. So in terms of 6 month stock profile, it currently it is near its peak performance. You know, it took a huge downward spike here, a huge downward motion here, and then a spike over here, and then a downward motion here, and right now it's gradually increasing and sitting at that $27 mark. You know, its lowest point, which was around here, was just underneath that $20 mark. So if you have purchased at this point, you know, you would have gotten a good amount of profit for this stock. So yeah, so currently sitting at the $27 mark, and let's move on to its 1 month stock profile. So in the past 1 month, especially in the month of the mid month of September, which we'll be looking at this huge increase here around that 14, 15 December, you know, I mean more than that, I think it's around that 17, 18 September. Not December, sorry, it's September, 17, 18 September. It took a huge rise here, you know, till that $29 mark, and then it went a steep downhill motion very quickly, and right now it has moved slightly towards a slight it has moved upwards slightly towards that $27 mark. So in terms of where we see this stock, you know, in the next few months, right now it's quite volatile and quite stagnant if you think about it. You know, its lowest point was the start of the you know, the near the end of last month, which was near the $25 mark, and for the past month it has only increased, you know, in terms of $2. So and it didn't take much what do you call that, volatility or spikes and drops. You know, the biggest spike came here, and to be honest, it's not that huge of a profit margin. So moving on, we'll be looking at the articles or what analysts and people have been, investors have been saying about this stock. And yeah, to start off, we'll be looking at the first article, which is three top artificial intelligence stocks to buy in September. So this article was published in 21st September by Leo Sun, The Motley Fool. So the Motley Fool issues rare all-in buy alert. Many investors might think of sentient robots when tech pundits discuss the booming artificial intelligence market. However, intelligent robots only represent a tiny sliver of the worldwide AI market that is projected to grow at a compound annual growth rate. So right now they're just giving a rough gauge on how the prospect of the AI market is going to look in the coming years, you know, currently and the coming years, of course. So just giving you a brief summary of the article here. So a large portion of the market actually revolves around algorithms and software platforms that help companies make data-driven decisions, automate repetitive tasks, streamline their operations, and cut costs. So let's get into Palantir. So Palantir is a data mining and analytics company that operates two main platforms. Gotham, as previously what we have heard, you know, when the description of the company, Gotham for government agencies and Foundry for large enterprise customers. So Palantir's platforms collect data from disparate sources, process it with AI algorithms, and help organizations make informed decisions. So just giving you a rough description of, you know, the company and what is going on within the company. So moving on to the numbers over here, Palantir's revenue rose 47% to 1.1 billion in 2020 and expects its revenue to grow at least 30% annually from 2021 to 2025. So that's a huge increase when you think about 30% annual increase, you know, from the year 2021 to 2025. So there is potential. They see a bright future for this company. So even though currently it's on that hold position, like I say, if there's a hold means they are not sure what the future holds, and right now they are seeing that there's potential to have bright future ahead of for Palantir. So the ambitious forecast suggests it will generate more than 4 billion in revenue in 2025. That is nearly quadruple of what its revenue was in 2020. So Palantir isn't profitable yet. That's why it's in the whole position. You know, analysts are not sure, but its adjusted gross and operating margins are expanding and suggest its platforms still have impressive pricing power. So Palantir stock isn't cheap at 37 times this year's sales, but its ambitious growth targets our ultimate goal of becoming the default operating system for data across the US government. So that makes it a buy. That's what they're saying. So key point from this article is that for Palantir, Palantir's margin expansion rate suggests its platform have increasing pricing power. So good potential. Investors looking for stocks with good potential long-term growth, this is a stock you want to pay attention to. So moving on to the next article, It is down 25% from its high. Is Palantir stock a smart buy? So this article came out in 2020, 22nd September by Trevor Genuine, the Motley Fool. So Palantir Technologies has quite the backstory. So they're going to go through a bit of the backstory, which we are not interested in. We are here for the numbers. But let's look at the last line here. Despite the fantastical namesake, the stock has taken a hit recently, and the share price currently sits 30% below its all-time high. At this discounted price, is Palantir a smart buy? Like I always say, you want to buy stocks when they are at the when they're dipping, especially when they're rock bottom and you see potential. That's why you want to buy. So let's read on what they have to say about this stock. So market opportunity. Palantir is a software company with two different customer-facing platforms, which we know already. So moving on, we'll be looking in both cases. Palantir software helps clients integrate and analyze siloed data sets. Okay, for instance, manufacturers like Airbus use Foundry to optimize supply chains, blah blah blah. In short, Palantir helps its clients make sense of big data, then use the information to take the appropriate action to take the appropriate action. To that end, management puts its market opportunity at 119 billion, which includes 63 billion in the government sector and 56 billion in the commercial sector. So there's huge market opportunity for this company with with investments from both sides, the commercial sector and the government sector. So that's where the potential lies with this stock. So competitive position. Palantir is more than a data analyst engine. Its platform also helps clients secure and control access to data. Yeah. So the company has a knack for safeguarding sensitive information. Okay, redundant. But Palantir also has another advantage. Its third platform, Apollo, gives the company an edge over most software as a service vendors. Apollo is a continuous delivery system designed to keep Gotham and Foundry updated at all times. It also allows Gotham and Foundry to run in atypical environments, whereas most SAS products can only be deployed in the public cloud. So this gives the company an edge in highly regulated industries. So a competitive edge, in terms of the sector that Palantir is in. So yeah, for instance, healthcare institutions and financial service providers cannot store certain data in the public cloud, meaning these companies may be unable to use traditional SAS products, but they can deploy Palantir software on site, where the Apollo platform can still provide all the benefits of the business model. So that's the advantage Palantir has compared to its competition. So key points here is that Palantir helps clients make sense of siloed data sets. The company's history with the CIA and FBI is definitely an advantage when you got good history with the government, the US government. You know, you have competitive advantage over your competitors. So Palantir currently trades at 31 times sales and its customer count remains low. So moving on, financial performance. This is what we want to pay attention to. Digital transformation has sparked an explosion in new technologies, and modern enterprises are generating data at an incredible pace. Companies that can harness that data and unlock its value stand to gain an advantage over their peers, and that's exactly what Palantir exists. Not surprisingly, the company has posted solid top-line growth during its short tenure as a public company. And although it did generate 61.7 million in free cash flow over the trailing 12 months, evidencing the sustainability of its business model. So it's able to generate cash, free cash flow, and you know, it's able to sustain itself as a company. When you're buying stocks, investing stocks, you want to look at companies that are self-sustaining companies, not overly relying, on other sources of revenue or income generating sources. So here is a gauge of where the company is at. We'll be focusing on revenue. So in quarter two 2020, the revenue was 900 million roughly, and quarter two 2021 is currently sitting at 1.3 billion. So there's a change of 47%. So it's going on a rise. So it's looking good. The future is bright, as long as there's an increase, year by year, is of course good. So currently the biggest red flag is Palantir's customer count, which remains relatively low. Yes, numbers hundreds in the hundreds is definitely low. In turn, the average revenue per customer sits at 7.9 million. And while no single customer accounts for more than 10% of the revenue, that figure is still fairly high. In other words, the loss of even a few customers could spell trouble for Palantir. So that's where the issue comes. You know, customer acquisition. When they don't have enough customers, when you don't have enough customers, any loss of customers will have a great impact on your company. So yeah, uh, things appear to be moving in the right direction during the most recent quarter. Revenue growth, which we saw. So the bottom line is that Palantir stock currently trades at a pricey 31 times sales, but the company has established a strong brand and a solid competitive position, and it benefits from a massive market opportunity. Despite Palantir's low customer count and relatively concentrated revenue, management is executing on a strong growth strategy. From that perspective, I think this stock is a worthwhile long-term investment. So they're looking at a long-term plan with this stock. So if you're an investor, you should not be looking for any short-term gains within the next few quarters. You should be aiming for long-term gains, with annual progression in terms of stock and getting back on your profits. So the last article I'll be looking at is two Robinhood stocks that millionaires are buying. So again, this is by Trevor Genuine, published on 22nd September 2021. So key points here is that Palantir helps its clients manage and make sense of big data. So Motley Fool issues rare all-in buy alert. In some circles, Robinhood markets, okay, we'll be focusing on Palantir. So yeah, and CEO Kathy Wood bought more Palantir's technology stock for investment firm ARK Invest, increasing the total to 30.7 million shares. In both cases, these growth stocks rank high on Robinhood's top 100 list. Why are these Robinhood stocks popular with millionaire money managers too? Here's what you should know. So Palantir Technologies. Palantir has been called Silicon Valley's most secretive startup. Okay, a quick description over here. Again, we have read all this before. In turn, that allows data scientists to build AI models and applications, and it helps executives make data-driven decisions. So, for example, manufacturers use Foundry to optimize supply chains and improve quality control on assembly lines. Pharmaceutical companies deploy Palantir software to accelerate drug discovery. So it has entered the healthcare sector, which is a huge sector in terms of revenue generation and whatnot. So healthcare institutions use it to improve patient outcomes, and financial firms use it to detect and prevent fraud. So yeah, but Palantir also allows enterprises to secure and control access to sensitive data. So these are just telling us some good things about Palantir and how well it's going so far. So that has helped Palantir establish its brand and grow its business quickly. So that's good signs for us investors. So through the first half of 2021, the company generated 551.8 million in revenue, up around 50% from the prior year, and Palantir now has 169 customers, up 23%. Although the small amount, it is still growing in its customer base. So yeah, the average revenue per customer, yeah, we read this, but no customer accounts for more than 10%. So going forward, management puts its market opportunity at 119. So they are basically repeating the stats, the data that have the previous articles have been telling us. So in overall, the essence of this whole thing is that about this company is that there's growth in this company, there's potential in this company, but it's a long-term play. You shouldn't be aiming for a short-term play. When you're trying to invest in this company, you're not going to gain much, and the future does not lie in the short-term play. So in the long-term play, this company is going to grow because it's part of the government sector, it's part of the healthcare sector, it's part of the commercial sector, it has it has it has placed its pawns on different sectors, and is able to recoup good revenue, good profits from each sector, and is doing well everywhere. But it's in slow progression mode. Like I said, it's in slow progression mode. There's no huge rapid success, so it is for sure a long-term play when you think about it. So in terms of what people are saying, they so the first first individual is saying they're steadily going to 45 plus dollars by December 2021. Possible good news may be released in the next few weeks ahead. So the graph shows a upward trend in the couple months. So yeah, amateur says that when not if Foundry PLTR becomes the operating software system in business, education, PCs, and all connected devices, more than half here will be millionaires within the next 2 7 years. That is a bit of a reach there, but yeah, we can see the growth. We can definitely see the growth in Palantir's technology. Less than a month ago, people were dying to see this at 25, and it's currently at $27. Going to reach 28 soon. So now we are down nearly 9% and above 25. People are losing their minds. Buy and hold. This is for sure a buy and hold play. Right now, even at this price, you guys can read, you can look at the comments, and all that. I'll be just you know roughly talking about how it has shown progression as a stock. It has shown in terms of $25. Now it's increased to 27. You can see the rise in this stock. Even the past few days the stock has been on the rise. But like I said, if you're expecting rapid rise, rapid increase in terms of stock price, that is not going to happen. I doubt you'll be seeing, like what Highlander is saying, 45 plus dollars by December. That is highly unlikely. That's not something I believe in, but I believe that it will reach at $45. Maybe in the next year. Not sure when or how fast or how early of next year you'll be reaching that point. But I see the potential in that $45. But this is 100% a long-term play in terms of years to come: 2022, 2023, 2024, 2025. This is a technology-based company. It has its foot, in different, it has placed its pawns in different sectors. It's involved in so many things, in terms of its operation and services. So yeah, so for me, I'm going to be investing in this stock currently 27. I'll be waiting if it goes any below than $27, 26, $25 mark. I'll be putting in my money into this stock, and just letting it ride for years to come, and reap the rewards after you know 2023, 2024, as years go on. So yeah, so there's huge potential in this stock. If you guys really believe in the stock, of course invest in it. I believe in this stock, and that's why I'm going to invest in it, uh, you know around that 25, $26 mark, even 27, a low 27s is a great buy still. So yep, as always, thank you guys if you lasted all the way here, and of course, hit that thumbs up button, hit that subscription button, hit that notification bell to notify you of more of such videos. Yeah, I'll be adding more stocks to this watch list. Just continue growing. And once I reach a point, maybe next quarter or next year, I'll be starting to look at my progression in terms of how my stocks have gone, the stocks that I've invested in, whether they have progressed well or they have not been progressing well. So yeah. So again, thank you guys for watching, and goodbye.